Hello and welcome everybody. Today we are going to be doing a session on Bollinger Bands. So I think you'll find this really interesting. I'll explain to you what Bollinger Bands are. They're pretty popular indicator, and we'll look at a couple of strategies, a couple of trading systems for using them. Trading systems you can start using right away. So let's dig right in. First, we'll have to do our little disclaimer. Of course, everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All statements made here are my own personal opinions, and all trading and investment decisions are your own and done at your own risk. Cool. All right. I think everybody knows who I am. I'm, been trading for a really long time. A CMT level 2 candidate. We'll just skip all the rest of that. All right, so in this session, we're obviously looking at Bollinger Bands. We're going to look at what they are and what they show you. We'll be looking at how they work with mean reversion. We'll look at how they squeeze together and how you can use that, and also we'll look at expansion, volatility expansion, and how the Bollinger Bands show you that. Then we'll get into a couple of trading strategies, a couple of the most popular trading strategies, and one that's really kind of a killer strategy. It's really probably the only strategy you should be using with Bollinger Bands. But you can also you don't have to trade off Bollinger Bands. You can use them as informational, just as information. Use them to highlight certain kinds of price action. We'll see that in a minute. And then, towards the end, after we've gone through, a bunch of examples and whatnot, we'll have time for a Q&A and some review. So let's dig right in. So what are Bollinger Bands and what do they show you? And you can see there's a chart on the screen right now, and the only indicator on this chart are the Bollinger Bands. You will see, two outer bands and then a line down the middle that looks like a moving average, and it looks like a moving average because it is a moving average. So anyway, let's go through this. So these were developed by a man called John Bollinger to show overbought and oversold conditions, and you can see that in this chart, right? I probably should have chosen a better chart, really, because it's not really showing you any oversold conditions, except right at the very beginning here. This is meta, by the way, so that's why it's just basically entirely oversold. But anytime we come down to these lower bands, that is where we would consider this to be oversold. And if we're at the top band, we would consider that to be overbought. And then, of course, we have the moving average in the middle. So consists of 3 lines, which I basically just explained to you. So we've got the 20-period simple moving average in the middle. And the outer lines are 2 standard deviations of the simple moving average as it relates to price. I won't get into the complex, complex formula to calculate this. I won't get into it. You can look at it if you want to. I think people should understand how to do the math on or how, at least how an indicator is calculated before they start using it, but I'll let you Google that on your own. So like I said, when price is near the bottom band, it's oversold. And when it's at the top of the band, it's overbought. Is that pretty straightforward so far? Anybody have any questions on that? Doesn't sound like it, so we'll just keep going here. Okay, so one of the main uses for Bollinger Bands is to kind of signal mean reversion trades. So what do I mean by mean reversion? When we're talking about mean reversion, we're talking about, when we get into this oversold condition here, mean reversion is when we bounce back up, so we're at the bottom band and we've become quite oversold, and we bounce back up to the top of the range, to the top band, or even sometimes only to the middle. let's get into that a little deeper here. So theory says that when price reaches one of the outer bands, it should retreat. Now, it doesn't always retreat to the other band. Sometimes it only retreats to the middle. So during strong trends, you can see, and you can see this here, at the beginning of this trend, we saw that price only made it up to around the moving average or the middle of the band. It didn't get all the way to the other band. And then it started to trend downwards, and quite rapidly too. And when price bounced, it didn't even really get up to the middle of the band the first time anyway. The second time when it came up towards the middle of the band, towards the moving average, came down to the lower band, then it went up and it got to the moving average again. And you can see back and forth here, up towards the moving average, but never really reaching the top band. And that's really common price action when you're in a strong trend. So that is one of the things that can show you. It can show you when price is going sideways, we see it ping-ponging back and forth between the bands, right? We're at the lower band, we're at the upper band, lower band, upper band, lower band again. And then when we fail to get to the upper band, we roll over near the moving average and we move into a trending condition. So that's one of the things that Bollinger Bands help to show you. So during sideways price action, as you can see here, price usually retreats all the way to the opposite band. So we can use this information, and we'll learn how to do that in a few minutes. So, this should say not an effective, not an effect. So yeah, this is not an effective trading system on its own. There are a lot of false signals when you come up, towards these bands. If you were just using any touch of the band, you can see right here. This would be, if you were going to buy this just because it touched the band here, you can see that wouldn't have worked well for you, and because it continued down for a while. So if we're going to be using this as mean reversion, we need something else in there. We need, we can use price action, or we can use support and resistance. You can see how well, these bands do act as support and resistance sometimes. Like I said, these can be combined with support and resistance to improve the quality of the signal, and they can be combined with other indicators. And one of my favorite indicators, and I think most people's favorite indicators to combine this with, is RSI. You can make a pretty killer system using Bollinger Bands and RSI, and we'll see that later in the session. Another thing that we want to watch out for with Bollinger Bands is a phenomenon called the squeeze, where you have, where you've got volatility, and you can see when we've got some volatility, the bands are quite wide. But as volatility lessens, you can see, we've been in a strong uptrend here, and the trend basically ended, and we started to move sideways, and see how these bands are squeezing together, they're narrowing. So this is a contraction of volatility. Volatility is diminishing, and these bands squeeze together. Now, eventually, because volatility is mean reverting, we can't be in a period of low volatility forever. We're not going to be in a period of high volatility forever either. So when we get into this period of low volatility, when these bands are squeezing together, eventually volatility is going to explode. And we can see that happen here. All of a sudden, price breaks out of this range that it was in. It breaks out of the bands, and it moves strongly to the downside for quite a while. And then we get a strong move to the upside. And see how much wider the bands get when that happens. So, so like I said, the bands squeeze together during a period of low volatility. Low volatility is followed by high volatility. The squeeze, unfortunately, does not tell you which direction to go. You have to wait for price action to tell you that. We don't know, just because, we've got the Bollinger Bands squeezing together, we don't know where this is going to go next. Once this gap down here, we had a pretty good idea that price is probably going to move to the downside. However, we got a really mixed signal with that hammer candle right there that broke to the outside of the band. Well, typically, when you see this break to the outside of the band, you should expect price to move in that direction. So when we break out the lower band, we expect price to go lower. We break out the top band, we expect price to go higher. And again, we're gonna be seeing a lot of this. This is not a trading signal on its own. You want to combine this with a break of support or resistance, or something else, price action, candlestick patterns. You really need to add in something else to make this a somewhat reliable system. And yeah, so like I just said, some traders will play the volatility expansion combined with chart patterns or other indicators. And we'll see how to do that in a few minutes. So why don't we look at some charts and just look at some different charts, see how these play out on the charts. So let's go. Is this the right one? Yes. Okay. So this is a chart of Monster Beverage, which we were looking at I believe we're looking at in last week's Ticker Talk or in the weekend video. We've been watching this consolidation up here. So you can see in the recent price action, we had a little bit of contraction of the bands as we moved sideways. Now this is we were in a fairly wide range here, so we didn't get the bands, contract really tight. And then, we broke out and we made a little move to the upside. And you can see that we're still, the bands are still showing us that we're in a period of volatility expansion. That's because there is a little bit of delay on here. They're operating off of a 20-day moving average. So there is some lag in this. But notice back here, you can see the bands squeeze together quite nicely. And you can see that in the price action that preceded this, right? How we had been in a fairly volatile period, and then price action got pretty tight in here. And sure enough, what happened, we had an expansion of volatility. Now, unfortunately, it all happened basically in 1 or 2 days, so didn't really give a playable signal. Over here, you can see, when we had the trend change, because we had been in a downtrend, and then we moved to an uptrend. And notice in this trend how, when we rolled over, price was hugging the lower band, tried to move up to the moving average and couldn't even really quite get there. And there was sort of bouncing between the moving average and the lower band. And even on the gap up, it got just above the moving average, never really got all the way up to the upper band, came down again. Now, when the trend changed, what's happening here is notice how price is spending a lot of time between the moving average and the upper band in this uptrend. We did have one breakdown here, but it didn't last very long, and it went right back up in there again. This is pretty common. You see this sort of pattern a fair bit. When, like I said earlier, when you're in those trends, it's difficult for price to get through the moving average, and often when it does, you'll get a big strong move. So if you can combine that with price action, for instance, here you can see this nice tight consolidation, and then the breakout of the moving average. That could be a good place to enter. Any other charts we want to look at? Let's look at, I don't know, I'm just going to randomly off the top of my head pick one. I haven't even looked at this with the Bollinger Bands. So this is Shopify. And again, we can see, when this started to roll over and into a downtrend, notice how the price just never made it back up above that moving average. Did very briefly, we touched the top of the band, and then it broke down again. And, we're in the lower half of this band until we start going sideways. And notice how price goes back and forth, between these bands as we're going sideways. And some people will play this as mean reversion. They'll be selling it at the top band, and they'll be buying it back and going long at the bottom band. I think you need a little more to it than that to be able to make a workable system or profitable system out of it. And we'll see that in a minute. Before we go any further, does anybody have any questions? Any other charts you want to look at? Does this all make sense to you so far? So I don't hear anybody, or I don't see any questions popping up in the chat. We'll move on, and if anybody does have a question, feel free to type away in that chat. Okay, let's move on then. So now that we've covered that, we've basically covered the basics of Bollinger Bands. They're not that complicated, really. We can look at some trading systems or strategies. So you can see on the chart, I have shown you a strategy that we can play a breakout of that squeeze. So like I said, you want to combine the Bollinger Band breakout strategy with something else, with a price action strategy as well. So you can see in this chart, I have drawn, I've highlighted where this broke out, okay? And notice on this breakout of the Bollinger Band, just ignore the support resistance lines for now. We just want to look at the Bollinger Band itself. Notice here how the entire candle is outside the band. That's our signal. That's our go signal. The candle before that, only part of the candle was outside the band, and that's not quite ready yet. Now you notice when the entire candle went outside the band, at the same time, it broke through an important support level, resistance level. And a couple days before that, it had broken through another important resistance level. So, on that first break, now the way I trade, I would have been inclined to just take that first break without worrying about the Bollinger Bands, because this is not the way I use the bands. But a lot of people do trade them this way. So, you get this breakout of resistance. This is your heads up. You've got another resistance overhead, and you've got those Bollinger Bands overhead. And when you finally get this candle outside the bands, you want to look intraday and get into the trade somewhere in there. Okay, so we can see the price is moving sideways with decreasing volatility. It's causing these bands to squeeze together. Look at how much volatility had been in the bands before, squeezing together. And price starts moving up along the band here, right? And you can see the band in a way is kind of acting as resistance on the way up. Like I said, you buy this candle, this highlighted candle, the first one that is entirely outside the band. Now, some people will fudge that a little bit because, these candles outside of the band are quite rare, as we will see. So bonus points, and I've said bonus points here because, like I said, some people will just play with a candle outside of the band, and that's it. I think it's important to have some other confirmation. So that's why I say, if you have very recently clearly broken some resistance, that really helps with the reliability of this trade. And so risk management is critical because you are going to get a lot of false signals. So you want to really, really manage your risk. If it's not working, get out. Respect your stops, and don't trade too large. Trade an initial entry size, and then see if you can find another spot to add on. For instance, in this trade. If you had entered, say, half size here, and then and really anywhere in this candle, and the next day, it gapped up. All right, cool. What now, right? Gapped up and it was a little choppy. At some point in here, you could say, okay, now I've been going sideways for a number of days. You could use the ball. Once this goes back inside the Bollinger Bands, you could say, okay, I'm going to wait until this goes back outside the Bollinger Bands to buy it again. Or you could just take a closer look at the price action in here and say, you know what, maybe if it gets above that level there, that candle, maybe I'll just buy there. Now, which means you would have bought at the top of this candle, and you probably wouldn't have liked the next day, but the day after that, you would have been fine, right? Use something like that to, add a second half in. All right, so let's go back to our charts and take a look at this strategy in action. Now, does anybody have any, before we do that, does anybody have any questions? Does everybody understand, how to do this? It's really a fairly basic system, right? I think it should make sense to everybody, but if you do have any questions, feel free. All right, so while we're doing that, let's go back to our chart. Okay, we'll look at a couple of these and see if we can spot, how we would play that. Where did I see this on IWM? Back over here. Here it is. Yeah. Now this is one that actually no, sorry. This is not a good signal here. You wouldn't have played the breakdown out of here, I don't think, because it really wasn't going sideways long enough. These bands hadn't really squeezed together enough. I don't think that was the one that I wanted to look at. But this, there is a squeeze going on here, but nothing really playable came of this one. You can see the candles never really got outside the bands. Okay, so it was squeezing, but no signal. Let's move back a little bit. Here we have, this is when, when the IWM was basically going sideways for quite some time. So it was really kind of squeezing a lot of this time, but right in here, you can see it really started to squeeze. And you can see it started moving all along the bands here. It moved down to the moving average, and then it moved back up. And then on your, on this big green candle here, that candle is mostly outside the bands, and you can see the following candle is also mostly outside the bands and kind of an indecisive candle. I would argue this is one of the situations where you could kind of fudge it a little bit, use your discretion and say, you know what, if this tomorrow, if this goes above, this day here, yesterday's candle, which would be this little doji right here, I'm going to get in there because then, the price action, once it's above that candle, is going to be outside the bands. And sure enough, that turned out to be a good entry. You had a nice big green candle and you had a few follow through days. And then with, good risk management, on a tight stop, maybe stopping below the following day's candle, you can make a little bit of money there. It's a little bit of a scalp trade, and a lot of these trades are. Let's look at coin. This one we're going to look at October of the previous year. Yeah, here we go. So you can see that, coin IPO'd. All right, and we really started to squeeze nicely down in here. We squeezed also back in here, right? We squeezed a little bit. And we had a candle that was right outside the bands, right after a big green candle. This one didn't work, obviously. And this is where your tight risk management is going to save you, because if you had gone in on this candle, you'd probably want to stop just below that candle, or perhaps just below the close of this candle, the candle preceding it, which would have been about there. But either way, if you had taken this signal, you would have been stopped out. I guess you didn't have a whole lot of setup here from other chart patterns. There wasn't a whole lot of resistance to break through or anything like that. And in a way, you were kind of chasing after this big candle. So it's not too surprising that that one failed. On the other hand, though, we come back over here. So, nothing really happens. And, if you shouldn't take that, you shouldn't really have taken that signal. You shouldn't really taken any of these up here. But I think we've got a nicer setup right here where, you start squeezing down tightly. You come up, you get some really tight price action in here. So you could, draw a line, for across that high, for instance. Maybe, you would have even put it here and thought that this was your breakout. You might have got, fooled a little, tricked a little bit by that, because I think the real breakout comes later, obviously. And, when we do break through that high, we get a candle that's almost entirely outside the bands, followed by another candle that's almost entirely outside the bands. Getting in one of those two candles would be pretty good. And you can see that we've also got some resistance, minor resistance in this one, from this area too, right? So you might have waited until the second day on that to get in. But that's where you would, that's how you would play that one. We can also look at another crypto company. This one back in April of 2020. Oh yeah, okay, yeah. See, this is a nice setup here. Oops, wrong one. That's the one I wanted to look at. Yeah, you can see here how the bands got tight for a while. You got an expansion of volatility, and then prices started going sideways, and the bands really got tight again. And they might have given you a bit of a fake out signal here, but you can see how you've got nice, a nice resistance level in here to play off of. Let me draw that in. Nice resistance level there to play off of. Maybe you might have gone in that day. If you did, your stop is going to be below the low of that day. You would have been fine. The next day, you get a little bit of a gap and go higher, and then go higher again. And if you manage to stay in this, if your stops were loose, you could have caught a bunch of this trend. Maybe even caught this the next time it's squeezed and broke out of those bands. You might have played the breakout here, or you might have waited until you got a move out entirely outside the bands and gone in on this candle. Yeah, that would have worked. That would have worked pretty nicely. That one was, yeah, okay. That's all I had on that chart. We've got a couple in Google. We'll go back to 12/20. Here we are in December 2020. Okay. And you notice that, after some volatility, this starts to settle in, the bands squeeze, and you notice how they start to squeeze, and then they squeeze a little more. This is really kind of the ideal situation, because on that breakout day, that instantly leads to an entry candle. Now, unfortunately, this kind of went sideways after that. Now, if your stop had been below that entry candle a ways, perhaps below the low or below the close of this candle here, right before the entry candle, you would have stayed in through this pullback. Otherwise, maybe you might have got a little bit of profit or broken even on it. But if you had managed to stay in, you can see after pulling back to the moving average, which is also another place you could put your stop, actually, right? After pulling back to the moving average, it broke out of the bands again. And then you got a lot of the sideways action, and a break below the moving average probably would have been your time to get out. Or once you get like a number of sideways days, as soon as you break out of that little consolidation, probably time to exit there. Oh, we also had another one in March, which is this one right here. Again, see, nice volatility, then these squeeze nice and tight. And even within this, you can see that the price action is really starting to squeeze in here. So this really gives you a heads up when you start to move back above this moving average that something's going to happen here. And, the entry is on this big green candle, because, this gapped up and it gapped right outside the bands. and basically continued higher. Slow at first, consolidate a little bit or for a while, but this did lead to a very nice long uptrend. That you could have got on, could have got in if you're willing to use fairly loose stops. And let's see, let's look at one that is setting up right now. So you can see this USEG. It's got a lot of fairly tight action. But we can see we've got a squeeze going on right now. We can see we started to, we got a tighter squeeze, and that's expanded just a bit. But it hasn't broken out of this yet, obviously. But it looks like it could be ready to go. Now, I suspect this may break to the downside. This could be setting up a short, but there's nothing here telling us that yet. So what we would do here is, we would find some support levels. And when this breaks out of the bands, so we want that September low, and we've also got some resistance levels overhead as well. So let's draw those in. So you can see we've got some nice support and resistance levels here. We've got our bands in there. And, you could just play the break. Either way it goes, once we get, as long as we're outside those bands, that's the way you'd play that. Just buy or sell it once that's outside those bands. Now, this is not my favorite strategy at all. I don't use it. It can give you a visual on, hey, maybe something is about to break out here. But as you know from looking at my charts for quite a while, everybody's been here for a long time, so that I'm more about looking for patterns like bull flags and pennants and triangles and that sort of thing, and support and resistance. So if you can combine this with something like that, it does have a lot more power. But I think when you're newer at technical analysis, this can help you to visualize how volatility is working within a stock. Help to visualize those periods of higher volatility and lower volatility. So I think it's helpful for that, but a trading system on its own, not so much. I think you've got to be really careful with it. But we will move on to a strategy that is it takes a lot of the subjectivity out of it, and becomes a lot more reliable. The signals are much better, but unfortunately there's fewer of them. You've got to look harder for them, and it can be quite difficult sometimes. You'll see a lot that are really close but not quite there. But before we move on to that, does anybody have any questions on this first strategy? And let me bring that page back up. So this would be a great time before we move on if anybody has any questions, but this strategy makes sense to you, then we'll go ahead and move on to a strategy that I do use that I like a lot better. Okay. So that strategy is a mean reversion strategy using an RSI divergence and an intraday trend reversal. And if we can also combine that with support and resistance, even better. It makes for very reliable signals when you can combine all this together. So let's take a look and see what are the rules of this system, of this strategy. So we're going to look at everything I'm talking about here is for longs. You would just reverse it for shorts. And when we get to the examples, we'll look at both longs and shorts. So we need a close below the lower band. Okay, so if we look at this chart here, we're starting to watch this here, and we notice we have closes below the lower band. In fact, we have pretty much all of this day here, we have pretty much all of the price action outside the band. Then the following day, we have pretty much almost all of the body of the candle is outside the band, and the close is below the band. So far, so good. Next step, the RSI is below 25. Okay, so, well, we don't, this is the RSI down here in the bottom pane of this. We don't actually know what this number is, but I can tell you that it's around 25. Next step. So price swings back up, or price moves back into the bands. It eventually swings back up. We get all the way to the top, or we get to the moving average, and then price swings back down again, and eventually breaks out the bottom of the band here on this big green candle. And I bet you some of you will recognize what this candle is. Anybody want to tell me what that candle is that day? Take a guess. You might actually get it. Okay, so what happens after we get down to this? We've broken through the band here, and I think you can also see, if you're kind of looking ahead on me, you can see what the next step of this is. So we have an RSI divergence. Does everybody see that? We've made a lower low here. We've made actually a few lower lows than this area here, where we made a low in the RSI. Now the RSI is much higher. IWM, no, Justin, this is it is an index though, and I was referring to this candle here. What is this day? This big green reversal candle. But that was a good guess, Justin, because the IWM looks a lot like this too. Okay, so we have the RSI divergence. You know, we've made prices making lower lows, RSI divergence. We've broken outside the band. And I think everybody knows what, an RSI divergence is. It's when price makes a lower low, RSI does not. Okay. There was a session, actually I'll link to, if you're watching the recording, I will link to the session on RSI. There's a section in there where we talk about RSI divergences because it's my favorite way to use RSI. I don't really use RSI to tell me if it's overbought or oversold, but I use it for the divergences because they are excellent signals on their own, and even better when we can combine them with these Bollinger Band breaks. So now we're going to watch for an intraday reversal pattern to make our entry. And that intraday reversal pattern came really early here. One more thing, and we'll take a look at this in a little more detail. I'll bring up the other charts, and so that we can also go to look at this intraday and see what that reversal pattern intraday might look like. But I'm sure everybody, you guys trade. You guys trade, intraday as well. So I'm sure you have your favorite intraday patterns, and you can just use that for your entry. I see Sol Shills is saying, yeah, would like to learn more about RSI divergences, and we'll watch the other video you call out. Yeah, I'll do that, and I'll just send you a DM or I'll link to it. You know what I'll do? And actually, when I post the recording here, I'll link to the other video in the post with this recording, and it'll also be linked in the YouTube description. Justin, good stuff, man. Yes, CPI came in hot on this big green candle day. So that's the day, we gapped down a lot on the hot CPI, and then we reversed. And you gotta like it when a market is going up on bad news, right? So yeah, that was a really important day. Okay, where are we going now? All right, so we're going to look at some examples here. But first, does anybody have any questions on this? Shills, you're gonna, this, just what we're doing here, you're gonna learn about RSI divergences quite a bit just from looking at these examples, and I think it'll really become clear to you as well. But it certainly wouldn't hurt to watch that RSI video. Okay, so we'll bring up, go back to our charts. Let's bring up a chart of SPY. All right, so this is the day we're looking at here. Sorry, oh, I should have, sorry, I want to clean this chart up. Just give me half a second here. Where are, oh shoot. So, there it is, okay. So many lines on this chart. That looks better. Yeah, we can see that more clearly now. And where did my check go? Cool. Okay. So you can see on the chart here, we have, you know, we've come outside the bands, went back in, came down, broke out the bottom of the bands, and we look down at the RSI and we go, look at this, we've got a rising RSI here. RSI on these days is higher than back in here when this was making lows. You know, on this day it's much higher. Okay, this is we've got a valid signal. However, is RSI or was RSI below 25 in this area? And now I'm just going to use my cursor here, and we were at on that day around 27. Let's go look right there, and I see that, yeah, relative strength index was 26.91. So this is one of the areas where when I see a nice setup like this, because, you know, I mean, I would play this divergence even without the Bollinger Band. So I'm going to say, you know what, 26.91, that's close enough to 25 for me. It's below 30. That's good enough. I'm going to go look intraday now. I'm going to be staring at this intraday, and we're going to find an entry here. So let's take a look at what day was that? 10/13, right? Okay. This is the day we're looking for right here. So we are, because we're all good traders, and we were paying attention in the morning because there was a CPI report, right? So, you know, we probably saw this big down candle. If not, you know, we were here a little bit before the open. The shaded area obviously is the after hours and pre-market. And we saw this, you know, big down candle and then start to consolidate. And then when we opened, we came up a little bit, you know, we consolidated a little bit and we started to move up. Now, very aggressive traders, having seen everything else that we already saw, right, on the daily chart, they might have, you know, when they saw this big green candle, they might have jumped in right in here somewhere, or maybe in here. I would have probably wanted a little more proof. I would have been wanting to see how a pullback reacted, right? You know, how is the market going to react to a pullback? Is it going to go up a couple of candles and then just dump? Remember, we had a really hot CPI number. You know, on the daily chart, it's looking like, hey, this is a pretty cool setup, but man, this is weird. It would be a weird day for this to happen. So I would have been a little gun shy about getting in. And I would have watched it go up, go up, go up. And I'm like, wow, I should have been getting in this, right? By in here, especially after we got through VWAP, I would have been having FOMO, but I wouldn't have chased it. And just in time, we got a pullback, and look at this. We pull back to VWAP, and we start to move up. Now, an aggressive trader who missed it the first time might have been looking at these little highs right here. Said, you know what, we break through there, I'm going in. And would have got in on maybe that candle or this candle here. I probably would have been looking at that high. because I would probably have still been a little gun shy, and I might have got in there, or I might have got in there. I would have hated, these wicks, but I would have known that. Look, once I go in this, I can't get out until below VWAP. I've got to see if this is going to pull back. I've got to let it pull all the way back to VWAP, and I've got to see what it looks like when it pulls back to VWAP. So I'm in somewhere around here, and I'm 10 or 15 minutes of thinking I might have done the wrong thing, but hanging on, and then things just get beautiful for me, right? And away we go. So that turned into a beautiful entry. I participated in 2/3 of that big green candle. So I managed to enter fairly conservatively and still get a lot of that gain. And I've got so much gain, I probably would have treated a little bit of this like a scalp. Probably when it started getting wicky up in here, I probably would have taken a little piece off, take some profit out, and then hang on to some. And I definitely would have held this overnight, because I thought, with a change like this, we could be starting a nice big uptrend. Would have hated the next day, obviously, but let's go back to the daily chart and see what that would have looked like. So yeah, you got in around here, I think. Actually, intraday. Let's go back. So yeah, if you were me, you would have got in around 354. 354, and this candle is right about there, right? That doesn't look like a terrible entry when you look at it this way, does it? And who knows what you would have done the next day on that. Yeah, I still think you probably should have been trying to stay in there, but maybe taking some profit, or taking it all off and looking for another entry. But that's how that works. Does that make sense to everybody? I see a question. So Shills is saying, how can you tell which line color is your VWAP and other indicators you got? Looks like you got quite a few up there. Yeah, okay, sorry, I should have explained that. I have explained what my lines are in past sessions, but that's a really good question, Shills, and I'm glad you asked. So let's get through that first. So my main VWAP is this teal colored line right here. In fact, why don't I turn off some of the other stuff? That one. Okay. Because these guys are all, actually, you know what? Let's turn those off. There we go. Okay. This line right here is my VWAP. This line right here is a 21 period moving average. So this will be whatever, it's 21 periods of whatever I set this chart to. Sometimes this chart is a 2-minute chart. Oh shoot. And then that blue line will be 21 2-minute periods. Let's go back to 10:13. Sorry, it's loading loading data. We'll go back to, oops, sorry, that should have been 5 minutes. Go. Okay. Where was I? Yeah. So the blue one is 21-day moving average, or 21 period moving average. The 21 5-minute candles. And the pink line is a 9-period exponential moving average. So in this case, 9 5-minute candles. So we also have on this chart, we've got, so this is my main VWAP, okay, this teal line. Now I also have another, now this VWAP starts from 4 a.m., which is when, right here, 4 a.m. Eastern is when the pre-market opens. So I want to see a VWAP that takes in all of the pre-market price action. Okay, now in most stocks, it doesn't really matter much because you don't get a whole lot of volume in the pre-market. But in something like SPY, and especially when we've got a big event, you can see we get a fair bit of volume. Okay, so I want to see what that VWAP is doing from the start of the pre-market. I have another VWAP that I have from the real-time hours. Okay, so this is regular trading hours is when this lighter one starts working, and you can see they do more or less start to converge as the day goes on, but early in the day they're quite different, and you can see that early in the day my VWAP that started from 4 a.m. from the beginning of pre-market, that actually worked. There is no doubt in my mind, there are lots of traders using that VWAP from the beginning of pre-market. You can see the one, the VWAP from the open, the regular trading hours open. Price never really touched that, or didn't touch it once at all during the day. And if we look at other days, you can see there is some difference. Now, we had much less volume in the pre-market on this day, so they do start out much closer together. All right, so hopefully that makes sense. And you can kind of understand why I have the two VWAPs. Now, oftentimes, one VWAP will dominate the other, which is really quite interesting. It's I guess traders who are maybe using that regular trading hours VWAP are doing more volume maybe, or they're just more aggressive traders, and you'll find that price bounces off of that VWAP instead of the other one. So that's why I have both of those on there. And finally, back to this VWAP. I also like to have standard deviations of VWAP. So these dotted lines here are the standard deviations of this VWAP that goes back to our pre-market hours. Okay, so the first set here is plus or minus 1 standard deviation. And I also have plus or minus 2 standard deviations. We'll turn that one back on. And there you can see plus or minus 2 standard deviations. And this is interesting here because you can see how that 2 standard deviation VWAP acted as support. Notice that really that 9-period moving average didn't so much, but that VWAP did. So that's why I have them there. It works. There's a lot of people who put these standard deviations on their VWAP. So therefore it works. Okay, and Shills has also asked, also for your VWAP, do you use 1 line or 2 for the setup? Yeah, I mean, kind of like I think I've already answered that question actually. Like I said, if I see that the one from the pre-market is the one that's working in this instrument on this day, I'm going to be paying more attention to that than the other one. So for instance, if price had come all the way back down here and it touched this upper one, which is our regular trading hours one, I wouldn't have paid much attention to that yet. I would have expected price to continue down and then maybe bounce off of this VWAP, because this is the one that had worked before, right? So hopefully that makes sense. There's also a session, there's also a recording, Shills, on VWAP. I did an entire session on it. So you'll probably want to watch that one as well after you watch the RSI session. So I will link to that one too. Okay, so back to our Bollinger Bands system. Unless anybody else has any questions. All right, so that was SPY. Let's take a look at QCOM, because that had a setup recently. Okay, here we are, very recently. All right, notice how we have some movement outside the bands. Okay, we move outside the bands here, pretty much have a candle almost entirely outside the band. RSI has made a low here, and actually, if we move ahead or back in time ahead behind that, even we can see we have another candle. I'm just going to zoom in on this. We have a candle here that is almost entirely outside the bands, and here almost entirely outside the bands, and we have a low with this RSI. We have lower lows in price. We have RSI, a higher RSI. So this was a signal in itself, okay? Now RSI on this candle here, I think got to around 25. Yeah, 25.36-ish. Close enough for me. 25.16, definitely close enough, okay? So we could have played this one. And let me draw in the RSI divergence there, okay? So there's your RSI divergence, that's pretty clear. And that was again on CPI day, you know, so you could have played this in QCOM as well. But this has now made another setup, right? Because we still have, you know, we've made a lower low than this low. We've made a higher low in RSI. Now, granted, these aren't below 25, either of these two, but we still have this one back here that was. And this is really all sort of the same, in a way, the same sort of price structure, price movement, because it is a bit of a sideways action in here, right? So we gap down, we get way outside the bands here, and we've got this RSI divergence, and intraday, this started to move up, right? Maybe you didn't like that day. It even gave you a second chance on the next day. So what day is this? This is 11:03. Let's go look intraday and see what we have for entry patterns on this. That was 11:03. That's that one there. All right. Okay, so this is a little bit messy here. Yeah, entries on this one are tough. Again, you know, you get your, you know, you had that giant gap down. Must have been earnings or something. Anyway, you had that giant gap down. But then, you know, the price action got pretty choppy, you know, after that. You got to move down. And again, you know, you get the same sort of setup here for an aggressive trader, right? After the move down, you start to bounce up a little bit. You get a couple of sideways bars, and you can see a lot of traders went in here, and you know, they were probably keying off of the high on that bar right there. So again, this is a very aggressive entry, but you know, I mean, sometimes you got to be aggressive. And you know, your stop really, if you keyed off of that high, your stop is just below this candle here. Initially, so you just size appropriately, right? So you know, what are we looking at here? You entered somewhere about 103.10, and your stop was 102.50. That's not bad, you know, for something that has been this volatile. So that would be one way to enter. If you don't get that, you get this giant green candle, you get a pullback. I don't see anything in here to enter. You know, you get this pullback, and you can see we're pulling back. Try to bounce a VWAP. I wouldn't just play the bounce. I would wait. It moves up. Maybe you might enter here, but then you got another consolidation after that. But I think actually a good entry in here, one that I like to, you know, the kind of entry I'd like to use intraday is, you know, when you see this kind of consolidation setting up, you basically got this descending triangle. And then you would enter here on a break of the triangle. Other traders, obviously entered on the break of that high, or you know, maybe you know, down in here a little bit. So that's a couple ways to get in, but definitely after this consolidation and it breaks to the upside, that's where you want to get in. So that would be your intraday entry on that one. We'll go back and just review this chart again. And this should have been no problem for you to stay in this one at all and ride this trend up. And now, once this gets to the top of this band here, you've had a really nice run. When you break out the top of the band, you're probably thinking to yourself, you know what, time to take a little profit. Maybe you only take half off or something like that. But the following day, when you get a gap down, you probably want to be out of the rest of it. So hopefully that setup and entry all makes sense to everybody. Okay, we got some more. These ones, some of these aren't quite as good. And we'll just go through these quickly. We won't get into the intraday thing on these. Okay. So Apple, let's go back to January of 21. So you notice that there, you know, when you look at these charts, there are not a lot of these signals. They're rare. But them being rare, that's what makes them good, right? What am I seeing? Oh, I see what I see. Okay. So this one, here's your breakout, your move outside the bands. Oops. Here's a move outside the bands. Okay, back in December of 2020, you can see that RSI is up here, and RSI in this case is going to be 72 and change. So again, not perfect, not the 75 we'd really like to see, but fairly close. We pull back in. You can probably stop paying attention to this. And then when it does this candle right here, see that candle all the way outside the bands? That's what catches your attention, right? And maybe you've got an alert set for this, you know, for any time on any stock that, you know, a candle moves outside the bands, you might have an alert. Especially in combining that with, you know, an RSI level. So you can see here, we've got that outside the bands. We want to check, does this have an RSI divergence? Yes, it does. That one was pretty close to 75, so good enough. All right, let's go in. Oops, that didn't work. That's going to happen, right? And that's why you have good risk management. You have a stop below that daily candle, or, you know, below the close of the candle before it. So you're not taking too much of a hit here. You're 164 down to 163, a buck on a $163 stock. That's not so bad, right? You know, maybe your stop might have been looser, but anyway, here's what it looks like when it doesn't work out, right? That's important to see as well. Okay, let's go to 2020 in March. All right. Yes. Okay. We have movement outside the bands and then movement back inside. We come down, we have movement outside the band, this candle right here, almost entirely outside the band. And you can see, we check, yes, we have RSI divergence, but what's this RSI here at? 2787, iffy. And given this was COVID going on here, you may not have taken this, but it would have worked really well for you if you had. Because look at the, you know, well, we all know the monster trend that happened after that, right? So, you know, this would have been a decent entry, even though, you know, we didn't have really, you know, we didn't have on that break below, we didn't have RSI as low as we would normally like to see. But it did turn into a nice setup. You know, and if you'd had a loose stop, you would have been able to stay in and catch all of this trend. All right, let's look at, what was 320? Oh, 1018 on Apple. Yeah, there were a few of these in Apple. 2018. Okay, I think this is a short one, this one. Yeah, here it is here. Okay. So here you can see you have this, oh no, that's not right. What was I seeing here? Oh, maybe it was, oh, is this one here? Oh, another one that didn't work. I should probably stop showing you these ones that, oh, sorry, no, this did work. This is a short. Actually, the other one we looked at too is a short. I've just got my mind on long. Sorry about that. Okay, So we break outside the band, that little candle right there outside the band. You can see that we do have an RSI divergence when we look back to the previous one. It's messy. There's our RSI divergence, and you can see the RSI was really high on these two, 85, right? So yeah, I mean, we definitely want to be looking for some trend reversal when we start seeing this stuff. When we've got, we've got we've got one up at 85, and then the one on the day that we were probably going to enter, which would in that day or that day, RSI was in around 80 on those days. Yeah, we're probably really thinking, okay, this is definitely overbought. We should look for a reversal, and we have this RSI divergence. Definitely want to get short on this, and it would have worked out really nicely for you. Let's take a look at Amazon on February 21 or February of 21. Okay. Must have been looking here. Yeah, okay, on this one, so you can see we have RSI divergences here. Okay, so we've got our high, comes outside the band, we come outside the band again, and we've got a slight RSI divergence. Let me highlight that. There, you can see that is down sloping a little bit, this line. So it's there, but what's missing here? Can anybody tell me what's missing on this setup? Go ahead and type it in the chat, or you can unmute and let me know. So while I'm waiting, I'll just go ahead and highlight. Oops. I will highlight a couple of things here. So we're looking at, we're looking at these candles here. Oops. And these ones right here. So a couple of things that tell you this setup isn't great. Nobody wants to jump in and let me know, let me know what's not right about this setup. Okay, I guess not. So I'll have to give it away. So when we're looking at this setup here, over here, really we don't have the entire candles outside the bands. That's not so bad. There's something else that's much worse. If we look at our RSI here, what's the RSI level at? It's only at 65. And then, back over here, it's down about a point from that. Nowhere near 75. So seeing that, this is a trade I would not have taken. I would have disqualified that. If RSI here had been at 71, 72, I probably would have taken it. And Chill says, yeah, it's a double top. Yeah, it's kind of a double top here. Not an ideal double top. And yeah, I mean, the Bollinger Bands are telling us it's overbought, right? Because we've moved outside the Bollinger Bands. But the RSI is not saying it's overbought, and RSI isn't anywhere near extreme. RSI is still under 70. And most traders wouldn't consider this overbought until it's over 70. So again, remember our rules. Let's go back to our rules on this. Okay. We have a close below the lower band, or in this case, upper band, right? Because we're reversing this to go short. And RSI needs to be above 75. So not 25, but 75. RSI needs to be above 75 in this case. And we did not have that here. So hopefully that makes sense now, and why you would want to, you've got to check for that RSI, right? When we're looking to go long, when we're looking down here, we want that RSI on one of these moves outside of the bands. We want that RSI to be below 25. And when we're looking to go short, we want the RSI on one of the moves outside of the bands to be above 75. Okay, so let's take a look at a couple that are setting up right now. So you can put these on your hot list. Watch these. Maybe watch this video again. But keep an eye on these because they're setting up. They might turn into a good setup. I kind of don't think I don't think Netflix is going to, because I suspect, unless it does it like tomorrow, if Netflix were to gap up tomorrow and get outside the band, then it may fulfill most of the requirements. But again, there's going to be a requirement missing on this. So what do we got going on in Netflix? What we have is we've come right up to the band and we are threatening to break out above the band. We're also coming into resistance, okay? Take a look at this gap. We've been watching this for a while on Netflix, right? We've been watching this great big gap, and this gap is now almost filled. And we've got some pretty solid resistance at the top of the gap in around 330. So it doesn't have far to go before it completely closes a gap and comes into this resistance. So that's another plus. All right, so let's say Netflix did gap up, maybe tomorrow, maybe the day after, got outside the band up in here, and we go, all right, so what is RSI doing? Well, RSI will turn up a little bit from there, but not much. So let's take a look back. We'll go back a ways, and it's like, oh, look we had some nice price action outside the bands right over here. And look at that. RSI was higher back over here than RSI is now, and probably this will be a little bit higher than RSI will be when this gaps up. Now remember, RSI is going to turn up when price moves up here. Okay. So, but we will have, higher high in price, and probably not higher high in the RSI. So, what will that probably look like? It'll probably look something like that. So, okay, so we have a divergence, but we've got a problem with this one. Same problem we had back in Amazon, right? The RSI was never above 75. Not even really close to 75. It was at 70, but not 75. So that's an X against this one. That's a red flag for this one. But because we've got resistance right there, I think we can let that go. We can say, all right, RSI isn't exactly what we want to see. As long as we've got this divergence still, as long as the divergence is still there, that's fine. We can let this sort of 75 thing go because we've got resistance right overhead. So yeah, I think this could be a decent play. It's just you want to be a little extra careful. Maybe play it a little smaller because it's not a perfect textbook setup, but it's pretty darn close. All right, let's take a look at another one. The big red flag on this stock is it's a 50-cent stock now. I still love this company. And thankfully I sold out of I had bought this thing. I bought this thing way back. I think it was in here. It was right after COVID. Yeah, the COVID crash. In here, no, it was on this breakout. That's what it was. It was on that breakout right there, and it was around 250. Rode it all the way up, and when it started to pull back in here, sold a bunch. Tried to hang on because I still really liked the company. When it broke down below here, I sold the rest of it. This is just an outstanding trade for me in this, and I can't believe when I pulled this up, going through some old watch lists, looking for setups to show you guys. I couldn't believe when this was down at 50 cents because this had been up at what was the high on this thing? $36, I think it was. Yeah, $37 was the high. A year and a half, or I guess close to 2 years ago now, and now we're down to 50 cents. So be careful, because this thing may very well be going to zero, but there's a potential setup here, because and we've got this low, and we've got a low in RSI. Okay, we've got this here. If this moves down, fairly quickly, if we get like the same sort of deal with Netflix, if we get a gap down, this will move, price will move down faster than RSI can move down, and we'll have an RSI divergence. That RSI divergence is going to look something like this. I suspect that if price came down to say 45 cents, 46 cents, RSI is definitely going to be above this line, so that line will still be sloping up. We'll have the divergence. We may want to consider getting in, but this trade is sketchy. This is such a weak stock, and they recently had really weak earnings. So you might want to wait, you absolutely want to wait for an intraday reversal on this before you go in. You've got to see a nice setup intraday while you're watching this. But there could be a decent play in here, because it was at 68 a couple days ago. So this is, what are we down here? From that high to where we are now, where you're likely to get back in, that's 30% this move down. And so it could take that back. It could take that back in a big hurry. So very risky, but might be worth a play. Just, make sure you obey your stops. It's not something you want to get trapped in, because it could very well go to zero. Just as easily go to zero as, as go to 70 or go back to $1, right? So that is FUV, and we got one more that is setting up right now, and that is in Visa. This is a much more reasonable stock to be playing something like this in, this has a couple of things going for it. So we've got a nice resistance level overhead. So let's draw that in. Basically comes from that day right there. Where we've got this resistance. And you can see that if we break out above the Bollinger Band, it's going to be up in this area here, which is right at resistance, okay? And RSI won't catch up. We're still going to have an RSI divergence from the last time this broke outside the band right there. We see that clearly. Okay, so let me just highlight that. So we're looking at that day, this RSI, the RSI here against what, we're going to assume this moves up and gaps up into there, gaps right into resistance. RSI at that point, what is we at here? 210 up into probably looking at around 215, 16. It's going to be a minor divergence, but it's still going to be there. Probably, RSI's probably come up to around the 70 level. And what were we at here on that day? 74.26. So not exactly 75 there, but again, close enough. Definitely close enough for me. I will take this short. We'll see what happens. If you want to be really risk defined on this, taking a short, or maybe you can't short in your account, for whatever reason, maybe you don't have a margin account, you can play with this with options. There's no reason you can't take these signals another way. It doesn't have to be with the stock. You could buy puts off of this signal. And I think that would be an interesting way to play. If it works, it should work fairly quick. So you could probably buy short dated puts, because puts aren't going to be cheap on this. It's a $200 stock, so they're not going to be cheap. If they're short dated, because this move should happen, within a few days, kind of like we saw over here, right? So you want to give yourself a week or two. but they shouldn't be that expensive. And again, just, use a stop. If this breaks out above this 217.50 level, that's your stop out. There you go. Hopefully that makes sense. Does anybody have any questions on any of these setups we just looked at, or any questions really on anything? Let's see.
Hey, Kevin.
Hey, Justin.
Hey, so my question is, I know that on your charts, you like to use the Keltner channels, right?
I have always used, or not always, I used to use Bollinger Bands quite some time. I use them a lot. And I switched to Keltners because I kind of, for some reason, I stopped using this RSI Divergence system. I can't remember why. I think maybe it was probably that period in around 2016 to 2018 when the market just started to grind up and the volatility was super low. So it just wasn't getting any signals. And I'm a firm believer in, if there's something on your chart and you're not using it, get rid of it. It doesn't belong on your chart because you're not using it, right?
Right.
That's when I would have got rid of it. And then I made the switch to Keltners because, so as you probably have noticed, right? I also don't like, one of the things I don't like is how Bollinger Bands can get this really explosive move and how wide they get. And you don't.
I noticed that Keltner channels follow it a little bit better. The price action.
They do. And really, what I use Keltners for. So here, let me throw the Keltners on as well. So the Keltners are the gray lines, okay? And you can see they stay closer to price. And all I've ever used Keltners for is more of a visual thing, so that I can really quickly look and see, all right, when is price getting extended? And it gives me that information, I think, more accurately and sooner than Bollinger Bands do a lot of the time. But in this process, putting this session together, I obviously threw the Bollinger Bands back on my charts, right? I've been watching them for over a week, and sort of reviewing my playbook to get this RSI system back, get used to that again. And I have to thank Marvin for that. Marvin is the one who requested, we do a session on Bollinger Bands, and it's really unfortunate that he's not here, but I know he'll be watching the recording. So I mean, I got to thank him for that, because I think that what I'm going to do is I'm going to pull the Keltners off and I'm going to leave the Bollingers on, and maybe sometimes both. Maybe what I'll do is I'll switch it on and off. I mean, it's easy enough to, I can switch it on and off, just by doing this. And there you go. Oops. Keltner's back on. There we go. And boom, I've got the Keltners if I want them, right? But I probably wouldn't use both. There is a system I've seen that does use both Keltners and Bollinger Bands. I think it's called the Keltner Bollinger Squeeze or something like that. The way it works is when you get, let's see if I can see. Yeah, you can sort of see it happening. When the Keltner squeezes inside of the Bollinger, that's a signal. So it's much like the squeeze that we were talking about earlier. But there's more specifics to it. I don't remember it well enough to explain it, but it does have something like you see here, right? Where the Keltner is squeezing inside within the Bollinger Bands, and it does that sooner, right? It does that first. And it's got something to do with that, but I can't really remember the rest of it.
Got
it. Did that answer your question?
Yeah. No, for sure. And I just kind of also, are they like just calculated differently too?
They are.
Yeah.
Yes. There is. I can't. It's way too mathy for me to explain. This
right.
The Bollinger Band formula is quite complicated.
Okay. But they're both just basically measuring volatility. is what it is, right?
Exactly. Yeah.
All right. Okay.
Yeah. So
And
unless
do some of the trades carry over as well?
yeah, I mean, you could look at, the same thing we've been looking at with the RSI divergence and everything. With the Bollinger Band, you could certainly use that with the Keltners as well. And so look at here. You probably actually get more signals with the Keltners because it's hard for price to get outside of the Bollinger Bands for very long and to get all the way outside. It's a little easier for price to get outside the Keltners. Now the settings, I had on the Bollinger Bands, you can see them here. These are the default settings: 20 days for your moving average, right? And 2 standard deviations, and pricing on close, of course. For the Keltners, we've got that set to, now I've got it set to a 21-day moving average and 2.25 standard deviations. If I set it to 2, there would just be too much price action outside of those Keltner channels. Look how much there is now, right? There's quite a bit of price action outside. So I like it a little, I like it to be a little bit more discerning. That's why I set it to 2.25. Oops, not 225. That makes sense?
Yeah, it makes sense. Cool. Yeah, I put them on my chart just because I was watching your videos, and yeah, I've never really like traded off of them. It's like you said, I kind of just use it as a visual sort of kind of like guide as well. But
Yeah.
usually, sometimes I don't even like notice them on my chart. Sometimes, to be honest.
Right. Yeah.
But cool. All right.
So and that's totally fine, because most of the time they're not telling you anything, right?
Right. Yeah.
You get used to ignoring them, but these times when when price starts moving outside them a little bit, when you get a breakdown here, and then you get another breakdown, you can see you're outside, you're like, yeah, this is really weak right now. Now you don't necessarily need that to tell, you don't need this Keltner channel to tell you that price is really weak. And that's why sometimes I even turn them off on my charts. But
right, yeah.
You could use it. It could be the kind of thing where if you see an RSI divergence, if you see this setting up, you go, okay, what is the Keltner channel doing? Or what is the Bollinger Band doing right now? Because maybe that setup is going to be there, right? And sure enough, yeah, it is, right? You can see that setup now. But maybe the rest of the time you don't want to have those Bollinger Bands on your chart. Depends what you're doing, or maybe you have a chart layout that has Bollinger Bands, and when you're scanning for this, right? If you set up a screener for this, if you can code a screener to look for RSI divergences, and then at the same time look for price action that is outside those Bollinger Bands, you can scan the whole universe of stocks every day for this setup.
Yeah.
And just play this setup, and I have no doubt that there are traders who make a living off this setup.
Yeah.
But when you first start trading it, just trade small, get used to it, and figure out how your risk management is gonna work.
Cool. Yeah, and I see what you're saying. They do help as like a quick visual aid. It kind of highlights certain areas and things like that. And I didn't think like to use them with like bull flags and stuff too. But now that I'm like looking at back at my chart, they do kind of like help with some of those areas too, right?
Yeah, for sure. Which one were you looking at with the bull flag? Ticker.
The one that I brought up to you actually on ENLC. In the chat like a couple days ago.
I totally forgot to look at that today. Oh, good, I set an alert.
Yeah. So you see, like on mine, I have the Keltner channels. It's like already crossing over.
Gotcha.
Like, how would I interpret that if I were to try and trade that, you know?
Well, it's extended, right? I mean, both. When we ride up along the bands here, it's telling us that we're getting extended. So first, let's look. I'll get rid of the Bollinger on this real quick. Oops. Okay. You know, when it's coming up here, when it's doing this, it's telling you it's extended.
Got it.
That's actually a sign of strength, right?
Okay.
But at some point, it's going to weaken. Now, when it weakens, does it do what this stock did, go sideways, and it gives you this bull flag, or does it roll right over? And it looked like it for a day, like it was going to roll right over, but it didn't. It's giving you this flag, and it is continuing to be constructive. Now that we're consolidating, we're drawing the flag. Price action is under the Keltner channel, so
right.
That's good, right? It's taken a break. So the Keltner is confirming that, and to me, it's healthy that it's under the Keltner channel now, and it's not moving that far away from it either, right? In this consolidation, it's not like for instance, back over here when we kind of rode along it for granted only a few days, but when it started to pull away, it pulled away quite quickly from the Keltner channel, right? And then we had failure. But here, we've pulled back inside the Keltner channels, but we're still staying close to them, and it's still sort of riding up, and now it's riding up along the inside of it, not the outside. So it's not as overbought as it was. And we see the same sort of confirmation happening with the RSI as well. If you use RSI for overbought and oversold, right? It got above 70, and then it started to move down in this consolidation. It's not quite as overbought anymore, so that's healthy. So so that's the Keltner channel, and the Bollinger Band pretty much tells you the same thing, right? Except that the difference with the Bollinger Band, and again, I mentioned this earlier, right? What happened, because it's like an elastic that is like getting too stretched, or a balloon that's just blown up too much or whatever, right? I call this kind of like ballooning out, because once we had rode up along the band here, the Bollinger Band just sort of keeps going for a while. And it looks like price is moving farther away from the Bollinger Band, but really what's happening is the Bollinger Band is moving farther away from price. You see the distinction there?
Yeah, got it. Interesting. Yeah, and you see more of the contractions that you're talking about too with the Bollinger Bands, like the squeezing of them.
Yes. So
and the inflating. It feels more like a balloon, I would say.
Yeah. So that's where the Bollinger Band, in my opinion, that's where the Bollinger Band has more strength. That's its benefit over the Keltner channel, because when it starts to squeeze, you get more of that squeezing together. It's easier to see that squeeze.
Got it.
So I'll put them both together here. So you see what I mean about, the Keltner is just sort of nice and behaved and smooth, but the Bollinger, it's sort of, it kind of overshoots in a way. And it just makes it look like what price is doing is less healthy than it actually is.
Yeah, I see what you're saying. Yeah, definitely. It even looks like it's starting to kind of come back in and contract again too.
Yeah. But here's what you were talking about, where you get that squeeze together, right? And you see it starting to squeeze together in here, and really telling you that, oh yeah, volatility is contracting. But the Keltner channel is pretty much going sideways, right? Takes a long time for that Keltner channel to start squeezing together, and by the time it does, there's already a breakout happening here, and the Keltner channel is telling you nothing about this breakout. And that's why I've never used Keltners for that. I don't really even use the Bollinger Bands for these breakouts. I showed that strategy, but I just don't use it.
Got it. Yeah. No, I see it. I see it. Like the Bollinger Bands definitely show like those signs of. I guess I can't find the word, but I see what you're saying. Like the Keltner channels, a lot of instances don't have any signals of like bad action in the price or whatever it may be.
Yeah, I think for this RSI divergence system, you'll get better signals from the Bollinger Band than from the Keltner channel. But you know, it'd be interesting. It'd be interesting to take a look at both, and that's something I might do over the next little bit as I start trading this system again. You know, flip back and forth between the Bollinger and the Keltner and see if one is providing a better signal than the other. And if I come up with, you know, if I decide that the Keltner is better, I doubt that it's going to be, but if I do decide that the Keltner is better, I'll definitely let you guys know. Hey.
Oh, sorry, I lost.
Whoops, Justin's having trouble with his stream now. All right, so does anybody else have any questions? Ah, you're back.
Yeah, sorry, my headphones died.
Oh, okay, okay. So we pretty much covered everything you.
We did. Thank you. Sorry, I was rambling, but I appreciate taking the time, Kevin. Thank you.
It's all good. No, it's good to get deep into the minutia a little bit. You know, some people will definitely appreciate that. Okay, so I guess if nobody has any other questions, I think we've had a really good session here. I think everybody should understand everything. And you know, and if you do have any questions, feel free to either DM me or ask me in the Discord. I'm always happy to answer your questions, of course. I see Schulz has asked, could I ever do a session on futures one day? Maybe, maybe not. Like I don't trade commodity futures. I used to a little bit, but not very much. I do trade index futures sometimes, but there's really not much, you know, there's really no difference. Once you understand the contracts and everything, there's not much difference. And I think that for futures, like I said, you know, the important thing is understanding those contracts, understanding what the value of a contract is, so that, you know, if you put a stop on something, you're going to know how much you're actually going to lose, because that can get confusing. And also, you know, the expirations, whether it's quarterly or monthly, and how things work going into expiration. And I think that's a hard thing to do in a video. I think it would just be super dry and boring, and not a lot to show you. I think you're much better off reading about it, either getting a book, or you know, or reading on some websites like Investopedia or something like that. You know, would be a much better way to learn about futures, because the trading part of it, you know, you're trading in and out. The patterns you're going to trade off, exactly the same stuff as, you know, as trading stocks. There's really no difference. You know, maybe some subtle differences in the way price action works, but you'll figure that out pretty quick. But the technical analysis part of it is, you know, exactly the same as trading equities. So, yeah. So, yeah, reading about it, I think, much better. So, I think we'll call it a day here. I want to thank everybody for coming out and watching. So, hope you enjoyed this. If you've made it this far in the video, you guys are heroes. Hit that like button, and we'll see you all again soon. Next week on Wednesday, we'll be going back to Ticker Talk for next Wednesday, and then a month or so in December, we'll be doing that session on Fibonacci retracements. So thanks, everybody, and enjoy the rest of your evening.